And then the last car I bought, I think would be a surprise, particularly to the IBC community, what my mindset was going in there. I was dead set on getting a bank loan, and I didn't care what the interest rate was.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And today we're going to be talking about a question that we get quite a bit, which is, should I be using my cash value to purchase cars? And so in today's conversation, what we're going to be talking about is the advantages of using a bank loan, the advantages of using a policy, and then what we've done and why.
Perfect.
Yeah.
Well, first let's talk about why Nelson uses a car example.
Yeah, absolutely. And Nelson uses a car example because if you remember in the book, what he's talking about is the all-American kid or person, right? Somebody that's making $30,000 a year in his example. And the other reason is because it's easy. Everybody's got cars.
Yeah, it's something easy to relate to.
Yeah.
It's something that just about everybody has, and we're continually buying more. Because one of infinite banking tenets are you finance everything you buy. So a car is easier to relate to. And also, I think people have this passion about cars.
Yeah.
Right? And they all, like, everybody has their dream car. And have we talked about your dream car on the podcast yet?
I don't know, have we? I don't think so.
You want to share what your dream car is, or you want me?
I would love to hear it coming from you.
Okay.
Yeah.
Well, I think in our podcast, we may have talked about your love for Paul Mitchell. I think there's a couple podcast comments in there. So I remember that one day you shared with me that so you love Paul Mitchell, right? And your favorite car is a Mazda Miata. Okay. And you would say, you're like, Anthony, my dream would be is if Mazda Miata came up with a limited edition Paul Mitchell edition of the Miata. And then I'm like, well, what is that going to entail? And you're like, oh, well, instead of having cup holders, right, there would be place for, your comb and your hair gel. And one of your favorite comments was, like, on my car, I pull down the visor and there's this little mirror, right, that I really can't I have to move my head to kind of see my whole head. But your vision of the Paul Mitchell Miata would be the mirrors go all the way around 360. So you could literally get the whole view of your hair. And with AI, maybe you'd mention that if the hair is out of place, there would be a sensor that would kind of warn you. So we all have dream cars, right? And yours is unique, and I'm not judging. Do you, as I say, Karen.
Do you? the Paul Mitchell Miata?
Hey.
Wow, all right. That was good, man. That was
Thanks.
good. That was good. Very good. Mind
Thanks.
if, was that a lead into anything? Or was that...
That was a lead into why Nelson talks about cars, because Nelson knew your love for Paul Mitchell.
Okay, perfect. Let's move along from Paul Mitchell Miata, and how about we talk about some of the advantages of taking a bank loan?
We're going to talk about the policy loan first.
Oh, you're right.
Yeah.
Good job.
Okay.
I thought that was second. You got me distracted.
I think I threw you off.
Paul Mitchell Miata?
That was a good idea.
How much time did you spend thinking about that? I thought you just had one joke in there, but then you put in the cup holder.
I'll tell you,
the mirror.
it came to me this morning. I'm like, and then I just kind of thought about it. Each time I thought about it, I'm like, ooh,
Man.
What about cup holders? I didn't even talk about the console. I was going to say what was in the console.
Dang, man. You
but
got those. You got yeah. You threw me for a loop there. All right.
Okay.
All right, Anthony. Now let's, as much as we'd like to sit here and talk about the Paul Mitchell Miata all day, let's move along. Let's talk about some of the advantages of taking or purchasing vehicles with a policy loan. You want to start?
Sure. There's quite a few advantages. For one, who likes to deal with banks?
Not me.
Right? So you don't have to worry about the bank. You don't have to worry about qualifying. You don't have to worry if that's going to be reported on your credit.
Mm-hmm.
Okay. Also, you have the flexible payments, because remember, if the insurance company is not going to require a loan repayment. So if something happens and you lose your job, or even maybe there's a great opportunity that you use some cash for, but it's nice to have that flexibility that you're not required to make that payment each month. Also, when you go to sell it, it's a lot easier, right? Because you already have title. You don't have to worry about any of that. And actually, one client was on a discovery call, and we were talking about it. He's like, I want to pay off my car. And we're asking why. And one of the things he brought up, which I didn't even think about, is since he's financing it through a bank, he's required to have higher limits than he would otherwise choose. So there's another advantage as well.
Awesome. Great points. And I couldn't agree more just on the flexibility of it. But how about we jump over and we talk about the advantages of using a policy?
I would say that in my eyes, there's one advantage.
And what would that be?
It's a big one, is you're maintaining your liquidity.
Liquidity for what? When you say that, what do you mean? What do our listeners need to know?
Liquidity for anything. I mean, part of it, it could be well, what if you got laid off? What if you're having trouble making that mortgage payment? Mm-hmm. Well, if you have that cash value, then you could use that to pay your mortgage payment. You could use that to make the car payment. Okay? But also, thinking big picture, more with a prosperity mindset, there's going to be opportunities out there.
Yeah.
Right? And if you don't have that liquidity, you're not going to be able to take advantage of those opportunities.
Couldn't agree more.
Now, I know, Cameron, you have categorized like 3 different reasons to use a policy loan.
Yeah.
You want to expand on that?
Sure. So when I'm talking to clients, right, we've gotten this question enough that we've got a kind of an answer that we'll give. And what I've done over the years is I kind of categorized the reasons why you would take a policy loan. And so there's really 3 of them. The first one that someone will take a policy loan, in my opinion, is usually debt. And so we kind of call that kind of bad debt, right? That's consumer debt, whether it's credit cards or something else there that we want to try to clear up as soon as possible. And we've done examples over the years of paying off debt and using policies and using the kind of the snowball approach over the years. So we're very familiar with that. The second category that I talk about is really what Nelson talks about in his book, and I call that lifestyle expenses, or where you're trying to recapture some of those kind of consistent, constant payments that you make over the years. Mm-hmm. And I usually throw cars, vehicles, and or like vacations in that category. And then the third category that I talk about is wealth creation, and that's really just buying an asset that is creating some sort of cash flow that comes back to the policy. So when someone asks me this question, I'll go through those examples, and then what I'll do is I'll kind of rate them, and I'll say, listen, if we've got any sort of debt, we want to attack that and get rid of that first. And then what we want to move on to is we've got our choice between going into kind of that lifestyle expenses and recapturing those, or looking at the wealth creation opportunities. And for me personally, is I would much rather see somebody go buy a rental property with a down payment than trying to, like you said, take a majority of their liquidity and dump it into a car purchase. And especially right now when you look at where interest rates are, for me, that just doesn't make sense.
One thing I want to note is when we talked about everything we've talked about until now, we didn't even talk about interest rates.
True. Yeah.
Right. And I feel too often we put too much focus on the rates of return. Mm-hmm. And like when we talked about the advantages of using a policy loan or a bank loan, if you notice, we didn't mention anything about rates. All of those were intangibles.
Very true.
Because it's hard to put a value on having that liquidity, and that if you can't make your mortgage payment, you can use a policy loan. Or if an opportunity comes, you have that cash to take advantage of it. We can't put a price on it.
Yeah.
but there's some definite value, particularly right now that we're in December of 2020. I mean, we're in the middle of a recession. There's going to be opportunities there, so we want to be in a place that we have liquidity so we could take advantage of those opportunities.
So I just went through kind of 3 different categories. Anthony, let me ask you this question: when would you say it is a good idea for somebody to maybe use cash value to buy a car?
I would say, some examples, maybe somebody is trying to buy a house and they want to qualify for it, but maybe their debt to income ratio is pretty tight. Well, the cool thing about a policy loan, that's not reported on your credit. So when you go to apply for a loan, you don't have to tell them about the policy loan. That's more of an internal obligation that you have for yourself.
Sure.
So that can help you. Qualify for it. You want anything to add on that? On when's a good time to use a policy loan?
Yeah, what I would say is that if someone is, what we talk about on the podcast is buying assets that create cash flow, and you only make those purchases when you've done the work to understand how that asset works and kind of you have a predictable outcome. But what I would say is if someone is uncomfortable doing that, if someone's uncomfortable buying a rental property, something they just don't know about or haven't had the time to do that, and they've got a bunch of cash value in their policy, man, it's like I said, as you're looking at the hierarchy of wealth creation versus debt recapture, and we're not comfortable kind of moving into those investment opportunities, man, purchasing a car with cash value is second best, in my opinion.
I would say it could also be a reason if you're like, this infinite banking, I don't know exactly how it works. It sounds too good to be true, or I'm not quite sure. Then try it out.
Yeah.
Easy way to try it out would be take a policy loan and pay off your car, and then repay your policy. See how it works.
That's a great example. I'm glad you said that, because that is one of the easiest ways to get people to understand that, hey, when I take a loan, I've got to make a repayment. And a lot of times they say, how do I make a repayment? Like, how do I figure out what I need to pay back this policy? And it's one of the easiest examples that you can make is, hey, listen, you borrowed $30,000 for the car, and this is the payment that you're making to that third party. If we take that over with your policy, we literally just have to make the same payment, right? So easy to understand, and it's a great kind of infinite banking 101, I would say.
And I'd also add, if there's somebody out there who likes to buy their cars with cash.
Yeah.
Right? And when somebody says, hey, I don't have a car payment because I pay for it in cash, is that accurate?
No, that's not accurate, right? And the reason it's not accurate is because the process that they've gone through to save up for cash is, I've made systematic deposits into a checking account, right? Whether it's $400 a month or whether it's $5,000 one month and then you take some months off, but you've created this pool of cash inside a savings account to get there, right? So the only difference between what you said and paying cash is that it's more systematic, right? It's more conventional.
Okay, so Cameron, you've been practicing IBC for many years.
Yeah.
Almost as long as I have. Now, how many? Hold on, I'm talking. How have you financed your cars since you read Nelson's book?
Oh, good question, because it has changed over the years. When I read Nelson's book, this was my vision, is that I would become the financier of all of my family's vehicles. Because I read the chart, and I was like, man, if I could put in, $7,000 a year, whatever it is, into a policy, and then I end up with this amount of money, why can't I just do that 10 more times? And so the idea that I had was, hey, I'm going to save up money, and I'm going to be, I want my family members coming to me when they're going to buy a car. And so Jessica and I started financing our vehicles using cash value. And it was several years into it when I kind of had this epiphany where I started to realize, man, if I go and I use my cash value to buy a vehicle, that loan repayment is dependent upon me working, right? And so if I want to take a month off, I have the ability to suspend those payments, but those loan repayments stop if I were to take a month off. When we take a different approach and I look at using the bank's money, or if I take a policy loan to go buy a rental property, is if I were to take a month off, that loan repayment is still being made by the tenant, right? And so the idea there is that my financial footprint is getting bigger than just my income, right? Because if I am financing my lifestyle expenses just with my income, it gets really tight at times, right? And so if I am able to go and buy assets that create cash flow and have somebody else making those repayments for me, that takes the pressure off of me and my income.
Perfect.
Yeah.
Nice. Well done.
Thanks. What about you, Anthony? What do you do now?
I would say I like to think I have financed cars just about any way possible. When I first got my policy, I don't know, I may be like some of you where I was a little apprehensive. Like, this sounded too good to be true. Why isn't everybody doing this?
Yeah.
But after doing my own research, I'm like, I'm going to put my toe in the water. And one thing I did, I actually liquidated my IRAs. And and that allowed me to put a lump sum initial deposit into my policy. So I had a lot of cash value from day one. Then I took a policy loan and I paid off my car. And then instead of paying Ford Credit, I paid the same amount to the Faso Family Bank. And you know what? When I was making that payment to Ford Credit, like, it sucked. Like, I didn't like making that payment. But then when I just made the payment to back my policy, I'm like, I never lost control of the money. So then I'm like, okay, this is working just like Nelson said. So the next car, I went and I bought it with a policy loan. Okay. Then, now this is a way, I don't think a lot of people have bought cars yet, but at this point, I wanted, now I felt comfortable with infinite banking. And I knew that this is where I wanted to focus my finances on. And I wanted to build a larger policy, but I wasn't sure where to find the cash. Like, I knew I would have it eventually, but right now I didn't. But I wanted to start a policy now as opposed to some point in the future. So what I did, I took a policy loan, bought the car. But instead of making that repayment to the policy, I actually started a new policy.
Okay.
For that amount. Now, looking short-term wise, I still have this policy loan. I still had interest. But for me, I knew I was going to have a windfall in the next few years. And when I get that, I'm going to be looking for a place to put it. So instead of starting a new policy 3 years from now, I was able to start a policy now. And then when I got that windfall, I was able to repay the policy loan. And in regards to a windfall, I think a lot of people think like large dollar amounts.
Yeah, winning the lottery, inheritance, something like that.
Yeah, but you know what? Windfalls can be much smaller. That windfall could be a bonus that you get. It could be a tax refund. And another thing can be is like I have kids, right? At one point I had 2 kids in private school. So when the first one graduated, I just had a windfall. I'm no longer paying that tuition. And then now with my second, she's about to graduate college this year. So we are supporting her in some capacity, but when she graduates, like, she's getting cut off. So I'm going to have a windfall there. So we want to start thinking with that abundant mindset. And these windfalls, they don't just need to be huge. It could just be a raise. It could be the kids are finally off the family payroll.
Yeah.
And then the last car I bought, I think would be a surprise, particularly to the IBC community, what my mindset was going in there. I was dead set on getting a bank loan, and I didn't care what the interest rate was.
Why?
Because I'm more worried. I'm not so much worried about an interest rate or a couple extra dollars a month. I want liquidity. Like, I'm an entrepreneur. I have a business. Things can happen.
Yeah.
Right. And also, I want to buy cash flowing assets. If I were, and I had enough cash value to pay for that car, but what that meant is if I used my money to buy a car, then I couldn't use it to buy assets. And with my personal view, I'm trying to build assets. So the rate could have been 7, 8, 9, or 10. I didn't care. But it turned out that it was almost about the same rate as a policy loan. But what we're trying to get through here is stop focusing solely on the rates. There's a lot of other intangible reasons, and particularly what Nelson what talks about, there's the seen and the unseen of IBC. Like, the seen is the loan and what the rate is, but the unseen is all the things the advantage that we talked about is having liquidity, taking advantage of opportunities, and it's really difficult to put a price on that.
Absolutely. I bet a lot of our listeners are surprised to realize that when we're talking about whether we should use a policy loan or the bank, is really that kind of falls into the unseen category. I would expect a lot of them were expecting us to dive into interest rate comparisons. But again, right, infinite banking is more about control and not always about interest rates. So hope you guys enjoyed this episode, and take care.
Make it a fantastic day.